Hey, what's going on, everybody, and welcome to your weekend briefing for the week starting April 3rd. In today's show, we're going to look at one or two earnings that are coming up this week. Earnings season has pretty much come to a complete close here. We're going to look at some of the macro that's going on. We've got PMIs this week. We've got non-farm payrolls at the end of the week. We've had a fantastic rally, so we're going to be looking at that, and we're going to look at a whole bunch of charts to see, if we can figure out where things are going to go. We'll look at a bunch of the setups from last week. All those setups from last week are doing really well, so hopefully you jumped into some of those. We've got some new setups to take a look at, some stuff going on in the AI space that I kind of like. So we'll look at that. And if you like what we do here, go ahead and smash that like button. It really helps us out. And if you're wondering why we do this, we do these videos every week to keep our members up to date on what's going on and to highlight fresh opportunities. We have a really cool community of like-minded traders, and members get to take part in live streams and mentor sessions. So check out our link down below in the description and come join us in the Discord. We'd really love to have you. Okay, let's move on here. All right. So everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All investment decisions are your own and done at your own risk. Let's dig into these earnings. Well, as you can see, there's hardly anything going on here. And some of these I only highlighted because there's really nothing else to look at. Starting on Tuesday after the close, I think DLocal, that could be interesting maybe. ConAgra is a really big, agricultural company. It's not going to move the market or anything, but if there's any surprises there, that one could get some motion. On Thursday before the open, there's Constellation Brands. That one probably is interesting. Then, of course, on Thursday after the close, we have Levi's. And there's been some interesting movement in some of the clothing companies. So Levi's could be interesting. Probably about the most interesting one this week. So there you go. Not much going on there. On Monday, we have the ISM Manufacturing PMI. PMI, if you don't know, stands for Purchasing Managers Index. This gives us an idea of the health of the economy. Lets us kind of know if, and it's a bit of an early warning sign too. Is the economy slowing down? Is it heating up? Obviously, we want to see a little bit of slowing, but not too much. Because a little bit of slowing is disinflationary, and that's what we want to see. That being said, we are starting to hear rumblings of recession fears now, again. Much less so on the inflation, because everybody now figures, okay, the Fed is done raising rates, or there's one more hike to come, and then that's it. And then at some point, possibly later this year, they start cutting. So now we start looking about, okay, are we going to go into recession because of all this? So that's why I say, a little bit of softness in the manufacturing PMI is fine. Too much softness probably scares the market a little bit. On Tuesday, we have JOLTS job openings. This is a jobs week, as you'll see in a sec. And JOLTS is the sort of the early sneak preview on the main event later in the week. On Wednesday, we have the ISM Services PMI. Now, this one's probably more important than the manufacturing PMI when it comes to inflation, because it is services, and services seems to be where the inflation's gotten a little bit sticky. So that will be closely watched for sure, and that could definitely move markets. On Thursday, as always, we have unemployment claims. Now, Friday, most global markets are closed for Good Friday, the Easter long weekend. And U.S. markets will be closed, and the Canadian markets will be closed as well. What's odd here is that we have non-farm payrolls on Friday, and I've checked two different sources, and they both show that these reports are coming out on Friday, and I was a little surprised to see that, and I don't recall these coming out on holidays before. So I'm not sure what to make of it. If I'll do a little more research as we come through the week and see if that changes or not. And update in the midweek video if that's going to change, if they're perhaps going to move that to Thursday. But so far, it looks like we have non-farm payrolls coming out on Friday, and the markets are closed that day. So I think that what happens is I think that, Thursday, late Thursday in the market, I think it would be normal to see the market get a little nervous, especially if we've had a good week, see a little profit taking coming into the long weekend, especially with this non-farm payrolls report on Friday. And this report will also affect markets coming into the open on Monday. So yeah, a little bit of strangeness to close out the week. All right, so let's take a look at our markets. We're going to look at the major indices, of course. We'll look at international markets. We'll look at some important commodities, specifically gold and oil. We'll look at the major sectors, and we'll look at a whole bunch of stocks in play, our plays from last week, stocks we're in. And I've got some nice new setups as well. So let's dig right into this. We will start with, not that one, we will start with SPY, the S&P 500. As you can see, this is a daily chart of the S&P 500, and you can see that we broke out. We were looking at this triangle sort of pennant formation here, and looking for a break to the upside in that, and sure enough, we got that. We started to break out on there on Wednesday, and then we continued much higher, and you can see that we've closed some of these gaps that we've been watching. There's another one there that was closed as well. And a nice strong move on Friday through a fairly major resistance level. So great to see. Now, I think, we are clear for, I think this continues higher for another day or two. It's the beginning of the month. The beginning of months are always generally strong. There's no catalyst that really, unless a manufacturing PMI comes in really hot or something, I don't see any catalyst that could really knock this back right now. And I just don't see why we wouldn't go higher for another couple of days. Maybe maybe Tuesday afternoon we see a bit of a slowdown perhaps, and maybe a bit of a turn or profit taking. But for now, I think closing on the high like this with this strong day, I don't see any reason why we don't continue a little higher. Come into the resistance here at, say, 415, maybe even up to this pivot at 418, 419, somewhere in there, before we start to slow down. It was a really nice, strong rally. Unfortunately, most of the gains happened until Friday. Most of the gains happened on gaps, as you can see, and it has left a bunch of little tiny gaps behind. We'll get those marked in later if we think they're going to come into play again. If we roll over at all. So that's the S&P 500. Let's look at the Qs, and that's where the real relative strength was on the week. You can see down on the bottom pane, this is relative strength or relative performance relative to the SPY, relative to the S&P 500, which is generally regarded as the market. And you can see, look at this, nice strong days, really strong day on Friday through resistance, has closed off most of this gap that goes way back to August of last year. So again, I think that this can continue higher. I don't really see any resistance, any real resistance until we get up into the top of this old gap from back in August. Maybe even this pivot up in here, up in around 330 to 333. So what we'll be watching for is continued move higher here. Oh, one of the things I should have mentioned when I was talking about how coming into the beginning of the month is generally strong the first couple of days of the month. April is a strong month. April is in pre-election years, which is what we're in now. April is the second strongest month of the year, historically. Something like 18 or, I can't, you know what, I'm not going to quote a number I don't exactly remember, but the very, very high percentage of Aprils are very strong. There's only been a couple of down Aprils in like the last 50 years. Okay, so let's move on to IWM, Russell 2000 Small Caps. Even these participated this week. Underperforming still, as you can see, but they still went up. Now we've come into a little bit of a minor resistance area here. I think we can get through this because I think that, and we'll look at this a little more detail when we look at financials, but I think we could see participation from the banks starting this week. And we'll get into that, like I said, we'll get into that in a sec, but no reason why I don't think we can see a little continuation here, but I don't think we're going to see outperformance out of these small caps for a while yet. Okay, let's look at the volatility index, and this has obviously been coming down on this rally. You know, I don't want to see this come down much lower because, as you can see, every time we've come down to 18, we have rolled over. The market has rolled over as volatility has spiked up and bounced off of these levels here. So you know what? I think the best thing that can happen for us here is volatility starts to go sideways in here. Our 10-year yield. So this one is kind of grinding sideways. We can see you had a down day on Friday. We're right on that 200-day moving average now. I am fine with 10-year yield just going sideways in here. We're continuing to move down. I mean, that's okay too. That would actually be even better. What we don't want to see is a spike up, and I really doubt that we would see that. Let's take a look at our dollar index. Oops, that's not our dollar index. Okay, here is the dollar index. You can see that we are in a nice downtrend, short-term downtrend on the dollar index. Intermediate term, we are just moving sideways. We're chopping sideways. And in the very long term, it is in an uptrend. Now, after moving down, you can see we've put in a little bit of support here. We've got, we've got a couple of hits on this line, from just over a week ago, and a couple of hits in the last day here. So looking a little indecisive, we would expect, because we are in a short-term downtrend, we would expect to move down out of this little pattern. And I don't know. I mean, my gut says we've got more sideways, and that we we consolidate between either this level with these lows and this major resistance overhead where the 50-day moving average is, also the 20-day moving average right there as well. Consolidate in that, or maybe we come down and test these lows from back over here. But I think that the major move down on the dollar index is probably done for more, and we see a bunch of sideways. Let's take a look at our dollar cost averaging tool. We'll start here with the SPY, and obviously this is still green. This went back to green, or it was flashing warning signs, as it has a couple of times over the last month or two. But we're back to full on green on your dollar cost averaging and the S&P 500, so all systems go there. QQQs, obviously that is still green, has been for quite a while. You can see where we got a bounce off these important moving averages too not long ago. But if we go to IWM, we can see that this is still in the red. And this MACD here, the blue MACD line, has still got some work to do to get above that signal line. Now it could do it this week if we see another week like we did last week in IWM, then yeah, this probably will turn green. But for now, it's hands off these small caps. All right. Yeah, I think that's all I got for you there. Let's move on to our global indices. So this is ACWX. This is the all-world index, X the US. And you can see that this had a nice strong rally, lots of gap ups here. But really, they're really happy to see this is moving higher and coming back to test these highs from back in February. And I do think we continue higher on this up into there before we probably start to consolidate there. EFA, Europe, developed Far East, and Australia. Really good move out of this over the last week, and right back into these highs from February. So you can see that Europe is doing quite well compared to the rest of the globe, and that's because there's weakness in China and actually, I shouldn't say weakness, but there's really no strength in China and emerging markets, as we will see right now. So this is emerging markets ex-China. These did move up, but relatively weak, or weaker than than other global indices. And finally, China large cap, and has seen some movement up, but again, underperforming the rest of the globe. All right, let's move on to our commodities, and we'll start with gold. Now, we've been watching this this little pennant or triangle formation here, bull flag, for a break to the upside. You can see we had that break to the upside, but hit this resistance level at 2,000, and where all these selling wicks were before, and guess what? It sold off again. No surprise there at all. I expect this pattern to fail completely. I don't really see, short of any other new catalysts, I don't see a reason for these precious metals to continue higher for now. Inflation seems to be under control. The banking sector seems to be, the banking crisis seems to be under control. So unless that flares up again, I think we're going to see some softness out of gold and probably silver as well. However, the miners are saying, hey, things are going well here. I remember last week or the week before, I was mentioning that, in that move up in gold, the miners weren't really participating. And now they have, and they've sort of caught up to these highs back from February or January and February. But I think that we're going to see this either roll over or go sideways now as well. There's really no reason for this to go any higher from here. If we look at silver, silver made decent gains on the week, especially on Thursday. But coming into these highs, from January and February, December and January. And again, I don't see what the catalyst is to take this higher. Copper. Copper's been consolidating here, and this is probably because of the fears of recession. But it's not rolling over either. So the copper is telling us these recession fears may be a little bit overblown, but we still got to keep an eye on it. I kind of expect copper, if this if this rally in the market continues, I would expect to see copper move higher. Let's move on to oil. Oil had a really good rally this week, up 10%, I think it was, on the week. Now look where we've come into. This is really interesting. See this triangle that we have been watching and that we broke out of, very weak coming out of that, completely fell apart, and has been grinding higher since. Well, we are right at the apex of that triangle now. That should act as resistance. So I don't want to call this a dead cat bounce, at least not yet anyway, because we've seen relative strength here, but we've had a really good move. We're coming into a zone where we should see this act as resistance, and I think it's going to. Now, I think that the most likely path here is that we see some consolidation in this zone, between this support level here and this resistance level here. Now, if we did break through this, if this turns out to be nothing and we continue higher, you've got to watch out for that 100-day moving average just overhead there, and then you've got some really strong resistance up here, in the 80 to 85, 80 to 82 area. Would be lots of resistance if we break through, but I don't. I think that's the less likely path is higher. I think the most likely path is sideways for now, and I don't think we'll have a big rollover, but it probably needs some sideways time. Nat gas, it bounced this week, and look where it bounced, right off of that pivot, right where it's supposed to. So that technically well behaved. Although, it did put in a slightly lower low than this, but, really that's kind of irrelevant. The important point here is that it bounced there, moved higher on Friday. It's going to there's all sorts of overhead here, lots of resistance overhead. So again, I think here, we maybe either consolidate here, which would be a little bit scary, maybe consolidating in between these levels right here. XLE. You can see that this had a nice bounce, you know, double, triple bottom here, whatever you want to call that. Really good, strong week, but it's come right into resistance. Closed above this 200-day moving average on Friday, which is good to see. But this is a major resistance level, and I think with, you know, with oil coming into a resistance level like it is, with XLE, the energy sector ETF, coming into resistance and momentum slowing as it comes into resistance, I think we can see consolidation under that level before anything happens. Let's move on to TAN. You know, TAN had a good week. Still choppy, gappy. Such a hard sector to trade. I almost feel like you should stop watching it. But there are, you know, if you want to go look on your own, there are some solo stocks doing some stuff. I don't want to... there's none of them I really want to recommend for anything, you know, partly because this sector is so choppy. But yeah, there could be some plays out there that could be fairly lucrative if you want to go look in that sector on your own. Let's move on to our major sectors now. We've got consumer discretionary. Now, this was one of the best sectors of the week. You know, this and energy. This had, and especially, you know, mostly on Friday. But you can see this did move up all week. And, you know, towards the end of the week, we started to really see that relative outperformance to SPY from this sector. This looks like it wants to continue higher. Watch out for this pivot here and this pivot here, though. Just looking to see if we should maybe draw in resistance levels, and I don't think so yet. But I'm going to actually draw that in as a pivot, because this is a level that we should definitely be aware of if consumer discretion is coming into here. XLRE Industrials, they had continued the nice recovery with a strong week. Bounced off that 200-day moving average on, what was that? Was that last Friday or a week ago Friday? Anyway, nice strong move up in industrials. I'm a little surprised that they got through this resistance level so nicely. And I wonder if maybe these need to kind of slow down a little bit here. This is a big move on these. So this is not a space I really want to play in right now. Financials. Okay, so this is some really positive price action here. You know, we tried to kind of fall apart. We hit this major support level and bounced right where it really needed to. And then continued higher through the week. And you can see now we're actually trying to break out of this, you know, this consolidation zone. It's a wide consolidation zone. I should actually tighten that one up a little bit. More in there. Still a wide area, you know, still building a base. I think, and so here's the thing. We have this financial crisis. You're running a hedge fund or a pension fund, and you report to your clients, you know, report to the board of the pension fund, whatever it is, you know, at the end of the quarter, which just ended last week, right? If you had a lot of financials in that fund, would you want to show that to your clients, to the board, to your boss? Probably not. And I think that's one of the reasons we saw some of this, you know, a lot of this selling, especially in here, you know, cleaning up the books, right? So, you know, window dressing, getting rid of some of those financial positions. And then, you know, once you've done that, you can see there's a little bit, you can see the selling stopped, really, right? And then it started to grind higher. I think there's a good chance that we see movement back into financials over the next week or so. I don't see any plays that I really, you know, I really like a whole lot. And I want to see a little bit of proof on my thesis before I jump in. But I think it is worth watching financials. Maybe worth watching some of the banks. You know, you can look at, you know, KBE is the ETF that has the larger banks in it. And you can see there's really no money moving into that yet. But, you know, there could be, and there is a bit of a consolidation here. That, you know, might be playable for a break. You know, if you don't want to pick a particular bank, you could even just play one of these ETFs, right? And you can see that, you know, that basis consolidation there. KBE is the KRE is where all the real trouble was. I mean, this is, where the regional banks were, and you can see a similar kind of pattern. The consolidation's a little looser, but I wouldn't be surprised to see a pretty decent move this week out of these. So again, might be worth looking at some of these regional banks and seeing if you can find a nice setup, a nice little play in there. But obviously, this is this is very risky. It's one of those plays that is a high risk, but that high risk probably buys you a really good reward. So if that's if you're okay with the risk levels in that might be somewhere to look. Let's take a look at healthcare. Healthcare's had a nice move, nice recovery after kind of this breakdown, grind higher, and a really strong move on Friday. He left this gap behind. Look at this, coming right up into the top of that old channel. You've got the 50-day moving average right there, and you've got the 200-day moving average overhead. So this kind of suggests that maybe healthcare may run out of steam here and roll over. But the fact that it was so strong on Friday and closed on the highs also suggests that it might want to break through here. I'd be careful playing in this space, but it might be worth a look there as well. Biotech. This one has not performed anywhere near as strongly as healthcare. But you can see a half decent consolidation here, building a base, and I think this probably just needs to build a base. And wait for this market to really go risk on. We're definitely been seeing risk on behavior over the last week, but not completely risk on. And you can tell if we were in a completely risk on market, you would see these biotechs going much higher. You would see IWM going much higher. So we're not there yet. REITs. We've seen some strength there out of the last week, of course. A ways to go before it finds any real resistance. Staples, another defensive area, and pretty decent strength here as well. Utilities. And these were higher, obviously, this week. Coming into some resistance here, and I think probably fairly strong resistance. So I don't expect to see much more movement out of utilities. And that's just fine because, they're a defensive sector. Let's get some risk-on behavior here, and forget about these defensives. So speaking of risk-on behavior, this is technology. Look at this move. Look where we are. We're coming into these pivot highs from back in August. There was a lot of pain in this space between August and now. But we have made a fantastic recovery to get back up here. Now, this could be really strong resistance, except that my thesis is that we continue to go higher. And if we're going to continue to go higher, I think that technology is going to be one of the sectors that leads the way. So can we get through that August high and maybe start moving up into these, these have been back in the March high from, a year ago. I have a feeling we might be able to do that. I think this rally has legs. And like I said, we're going to see technology's got to participate if the market is going to continue to rally. Communications. Maybe we see rotation into here because obviously the communications sector has not performed anywhere near as well as the technology sector. However, we have broken through sort of that last downtrend line, from going way back. So that's good to see. Broken through that. Watch out for these pivot levels just overhead. We've got a pivot here and a pivot here, obviously. Got to watch out for those on the way up, but maybe we'll see a little bit of rotation in here, and this gets some relative strength for a change. Semiconductors. These have done well over the last week too. Or last little while, actually. Choppy and messy, but you can see that, I probably actually need to move up the top of this channel here. But we are still firmly in this channel. Keep breaking out the top of it. So I am going to move that up. Let's just put that up there and see how that works out for us. But coming into the top of this now, will it slow and possibly roll over there? That's kind of what we would expect. expect. But again, if this rally continues stronger for more than a couple of days, we could see a breakout above the top of that. There's a level overhead we want to watch out for. Yeah, there's 270, 271 level here that goes back into here, and then some other pivot levels that are above that we'll mark in a little later. All right, let's look at our FAANGs. Start with Meta. This one continues to grind higher and continues to show some relative strength to the market. Broke out of its little consolidation on Friday. No reason why that shouldn't go higher. I don't think, what are resistance levels overhead here look like? I don't see anything serious for a little bit. But yeah, we do have some levels that probably want to get marked up on the chart for the next time. Apple had a nice move on Friday. Kind of broke out of that little, I guess on Thursday really is when it broke out of this little top that it had put in here. And, moving higher, looks like it wants to go and attack that old gap up there. Amazon continues to be a bit of a weak link. Come on, Amazon. Here we go. Yes, you can see that this did break out, but I mean, it's not a very convincing breakout out of here, is it? It's just there's just no relative strength out of this, in my opinion, and so no reason to really be in it. At least for a swing trader, or a short-term trader, no reason to be in it. If you're an investor, yeah, I mean, obviously it's a good company. There's no doubt about that. But if we're looking at money in the shorter term, there are better places to look than Amazon. Let's see, Netflix. This was one of we highlighted this as a play last weekend, and it did break out, but sort of not convincingly. Half decent move. I mean, nice gap, and then move higher on Friday, coming into resistance, and there should be a fair bit of resistance here. I think that this can continue to grind higher and come up into the 370 level, where it will probably consolidate again like it did before. Google, not a lot going on here either. I mean, Google's kind of in a way, I think, similar to Amazon. Although, this did have a nice day on Friday, but it did not have a good week. So, yeah, I don't know. I'm not that interested in Google for the moment. Microsoft, this one did have a pretty decent week. And a really strong Friday. Closed out this gap that goes way back into, when is this? Got to be like August. Coming into another gap that goes way back, and some resistance up there. So wouldn't be surprised to see this slow down a little bit as it comes into this area. And then Tesla. Now, Tesla had been consolidating, building a bit of a base here, and broke out of that base on Friday, got right into this important resistance level and paused, but closed on the highs on this day. Now, we've got, we've got a little bit of messy stuff going on here to act as resistance. We've got that 200-day moving average. So, I think if we're going to have a general market rally, Tesla's going to have no problem getting through this stuff. Tesla is one of the stocks I think that people will go to if they think this rally is going to continue. So that can be a little bit of a tell for us, perhaps. All right, so some of the stocks we looked at last week. NVDA. We've been watching this for a while. Now, this has been consolidating. The uptrend line here held, that 10-day moving average, the pink one that you can see there, that is holding nicely. And did it try and break out on Friday? Well, it did try and break out on Friday. It didn't get very far, but it did close on the highs. So we need to see continuation out of that. We've got a pivot level just overhead that's going to act as resistance. But then after that, there's a fair bit of running room, I think. Somewhere up into around 320 on NVIDIA, if it can break out of here and get through this first pivot at around 290. DigitalOcean is one that we highlighted last week, and that had a really nice breakout. started to break out on Thursday. You could have got in there and you would have really been rewarded on Friday. This has got some more room to run here up into 42, and then it starts coming into some resistance. So if you're in this and you see this coming into 42 and starting to slow, it starts to lose momentum intraday. Not investment advice, but smart traders, that's where they're taking some of their profits off after a nice run like that. Workday, another one we highlighted last weekend. Look at this move. So obviously, you know, if you got in the open on Wednesday, and I got right in the open. I just felt like, okay, this is going. I want to get in early. Not going to wait for the for the line up here. Did get in early and was happy I did. Obviously, you know, nice moves up here. I think this can keep going. I think that we can fairly easily move up into this 215, 216 area here. And then I think this should probably consolidate in there for a little bit. I've already taken a little piece off where there was some slowing momentum intraday on Friday. And I thought it wise to take a small piece off and just take off a tiny little bit of the position. I will definitely take off a piece of the position, probably a third or a quarter of the original position when it gets up into this 215-16 area. And obviously I'm also following with stops. Now, I mean, you've got an area here, this gap, that you know, if it was to get and close this gap, it would probably continue to roll over. What else? Oh, Duolingo was another one. This is one that I pointed out in the midweek video. And this one broke out nicely on Friday, but it had weakness intraday. So if you jumped in this, hopefully you took some off as it started to roll over intraday. If not, you want to be really careful here, because I really didn't like that intraday action. You can see here, obviously, when we started to, I mean, it was beautiful. I mean, this nice move, the breakout and the nice move up was great. And then, once we started to roll over here and got this red candle, I took a good chunk of my position off once we got below the low of that green candle there. Figured, okay, you've got this green candle. It starts to, it starts to go up after the little pullback there. Great. But when you get below the low of that candle, it's like, okay, no, we are rolling over for sure. And, we did try and bounce again. But then, that failed as well, put in a lower high and just started to grind lower through the day, and that accelerated towards the close. Now, there are areas, you can see areas on this chart, we had little consolidations. So there are areas that should provide support if this continues down a little bit on Monday. But, I don't know. I don't see any reason to lose money on this trade. At worst, if you jumped in on the breakout, at the very worst, you should break even on this trade. All right, let's look at some new setups. So I want to first, now this is not a setup, but I want to show you what's going on here. This is AI. And you can see, look at the strength that this had on Friday. 21.5% on Friday. And that's after a couple of nice days before that. What is our overall move here over the 3 days? So if we go from the low on Wednesday to here, you can see there, about 38% move in 3 days. So obviously this space is hot again. Look at the volume we had here on Friday. It's entirely possible that this could just be a blow-off, but I think that AI is going higher. However, it's run too much for my liking. I want to look for other stocks in this space that haven't run so much yet. So one of those, or actually one of the ways to play this space, if you don't want to pick a horse, if you don't want to pick a singular stock, you can play something like BOTZ. BOTS. This is the Robotics and Artificial Intelligence ETF. Now, obviously, you can see nowhere near as strong as some of those individual stocks, But this bro had a nice little breakout of this sort of consolidation area and is moving higher, nowhere near as strongly as AI is, AI the stock, but still a nice little move here. So this could be a way you play this, and especially if you want to be in this space longer term. This is, and I have a piece of this that I intend to hold, well, an intermediate term anyway, to play this space without having to pick a winner. But shorter term, I do want to pick some winners, and one of those winners I think is going to be Path. So what have we got going on here? You can see I've marked this. There is a fair bit of resistance overhead in this. Okay, so we need to be aware of that. And we are right at a resistance level now, and with another resistance level coming up at $22, the top of this consolidation. But let's zoom in a little bit here. Obviously, you can see, actually you need to zoom out a little bit farther. So we've got a trend line here from these highs back in, this is just post IPO back in May of 2021, so almost 2 years ago. That downtrend line, and you can see they were right on that right now. Tried to break out of that on Friday and failed, and you can see where we failed at this 18-ish resistance, where we've got some other wicks up in there. Now, if bots keeps running, or not bots, sorry, AI the stock and AI the sector keep running, this will break out of here. I have no doubt about that, and make a nice little move to 22. So that's 18 to 22, $4. That's a pretty decent little move that we can play for here. So I'll be watching this closely now. In an ideal world, this comes up here and goes sideways for a couple of days and then breaks out. I don't think that's the way it's going to play though. So I intend to buy a breakout above the high. I'll also be watching intraday action, maybe watch the open here and see how this opens, and see if there's any levels that we can play off of. Looking at the intraday chart, I think that if we did open around here, once you get through this level, might be a way to give you an early entry. So that's something to watch out for. And obviously your initial stop would be below these two lows here, below that 10-day moving average. But I think you kind of want to move that up fairly quickly because this, this space is volatile. You don't want to be hanging on to something for too long if it starts to roll over. So that's one of the ways to play this. I like this one. I'm probably almost definitely playing that one. There's another one. There's a Chinese AI company that IPO'd recently. And this could be really interesting. Now, this is super high risk, super speculative. This is definitely not for everybody. But if you're a good momentum player, this might be a play for you. If you're the kind of trader who likes trading the open, if you love those first 15 minutes, those first 30 minutes, this could be a good play for you. Do you play above this pivot here? Perhaps. Perhaps you're looking for intraday momentum. Perhaps you wait until you get above $8, although that's still $1 away, so you probably want to try and capture some of that dollar. But I suspect once this gets above $8, and if the AI space is running, this could really run. There's not much short in this that we can see, but that's because the short data on this is really stale. It hasn't had time to get shorts in that. But you can see that traders are playing this. Obviously, look at this move on Friday. This was 25% on Friday. So this will have more play on Monday. I have no doubt about it. But this is really for those momentum players who guys who love guys and girls who love that intraday momentum. Really aggressive players. All right, another play. I really like this one. I think I'm gonna do a video on this one because this one, as you can see, has lots of short interest, 25% short. Now this data is a little stale, but I don't really see, just given the price action, I don't see any reason why that would have changed. So 193 million float, and 49 million shares short. I think that if this starts to go, these shorts are going to start to freak out. They're going to start buying this back. And that will just make it go fast and scare even more shorts. So this could really start to squeeze. It's pretty obvious where you'd get in here. You know, I don't like the big move, 5% move on Friday. I hate jumping in after a move like that, but I think you just kind of got to hold your nose and do it. Because there is definitely, I think, going to be some strength here, and this sort of plays into this AI space as well, right? Because this is the ARK technology ETF. Anyway, I'm going to do a video just on this one, and that's going to come out this afternoon. So we'll give you a little more detail on this. And finally, last play. This one is in the healthcare space. And you can see here, nice little bull flag. I should have drawn that in before I started the video. We can see that we've got a nice consolidation here. Nice flat bull flag. And, you know, you could get a strong move out of this. And we saw earlier that healthcare, you know, potentially moves higher. It's definitely got some momentum now. So if healthcare continues to move higher and we, you know, continue to see the rotation into that sector, this could definitely go. So this one is LFST, LifeStance Health Group. That is all the stocks we want to look at for today. And that is everything I've got for you. We'll be back on Wednesday for our midweek video. And also for members in the Discord, we'll be doing our live Ticker Talk session. So if you've made it this far, thanks for watching. Hit that like button, share, and subscribe. And enjoy the rest of your weekend. And watch out for the video coming in an hour or two. More detail on that ARK ETF swing trade. Thanks, everybody.